Following podcast was recorded on Thursday, July 29th, 2021, featuring Jim Bianco of Bianco Research and Ben Breitholtz of Arbor Data Science. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to Talking Data. I'm your host, Kristen Radosh of Arbor Research and Trading, joined today by our presenters, Jim Bianco of Bianco Research and Ben Breitholtz of Arbor Data Science. Welcome to both of you. Today we're going to be talking about the Delta variant. News flow is refocused on the virus the last several weeks as the Delta variant has spread around the world. Where are these cases growing the most and how fast is this happening? Jim, do you want to get us started?
Yeah, thank you. First, let me just off the top say that we're here to talk about the economic impact of what the Delta variant is going to do. This is different from the health impact. We're not going to address that. That is a whole different conversation, so let's not confuse the two. So if we go to the first chart I've got, and I'll explain it to you for those that are listening, it shows the US cases reported. Let me off the top say, when talking about the policy responses that we've been seeing, I think it's all been driven by cases. You can have a very rational argument about hospitalization and deaths and treatments and vaccine numbers, but yet it seems that the reaction to policymakers is off of cases. So the orange line shows a rolling 7-day average, 7 days because the day of the week is very seasonal. Labs are closed on the weekends and there's a big drop in the number of positive cases. And the spikes you see on the chart are Fridays. Friday seems to be the high day of the week. Since July 5th, the 7-day average has gone from 10,000 to over 60,000. So in the space of about 4 weeks, it's gone up 6x. Over the last several days, we've been seeing about a 50% rise from day of the week. So Wednesday to Wednesday, Tuesday to Tuesday, a day of the week rise. The highest day of the week is Friday. If that pattern holds, we could be seeing something like 180 to 200,000 reported tomorrow, which would be reported late tomorrow if not in the Saturday morning. The reason why that might surprise you, we had reported 118,000 cases the previous Friday, is because on Saturday and Sunday, the cases drop a lot and it falls off the news. So we've gone from 10 to 60,000. If you look at the next chart, it just shows you the bigger picture. And it shows you that, yes, back in January, we were around 300,000 cases. We're still relatively low to where we've been, but that steep ascent, I like to say, let's wait for mid-August and let's see where we are in mid-August. Moving on to the next chart, this is a global phenomenon. This is Asia, less China. China's a separate circumstance and they've got different issues. But for those talking about the impaired supply chain and that the coronavirus or COVID has hurt the supply chain, we just set a new high in Asia and the old high was yesterday. So we're going in the wrong direction. If the hope was Asia would return to normal quickly as they got past the coronavirus in order to get the supply chain moving, that's not happening right now, at least in terms of the number of cases being reported. If we jump to the next chart, the good news is it doesn't go up forever. You know, this isn't going to be that we're all going to get it and die. It does peak. And we've seen that there was, starting in late May, a rise in cases in the UK, and that peaked on the 17th. So that peaked 12 days ago, and it's coming down quite a bit. So, but nevertheless, they did see something along the lines of about a 10 to 15x rise in their cases. Finally, a couple of other charts just to put this table setting. Japan, you can't, you know, the Olympics are on, it's the global event that everybody's facing. I highly doubt that they said, hey, let's delay the Olympics a year so we can make sure that we have them when we're making new highs in cases. And that's exactly what's happening. Japan's all-time daily case count was yesterday. And there's been a giant spike in the last couple of days. And I might just parenthetically add, there's some anger in Japan because they think that they've got the world's largest super spreader event known as the Olympics going on. They're in lockdown and cases are spiking. And then the final chart shows the number of cases worldwide. It's over 500,000 again. It's starting to move higher as well too. So the Delta variant is on its way up right now. Cases is what policymakers seem to respond to more than arguments about health or hospitalizations or treatments or anything else. And we're starting to see signs that there's economic restrictions, but more on that as we progress in this call.
Ben, what are your thoughts?
So yeah, again, using some of the alternative data that we have, which in particular search activity, one thing we've been looking at pretty closely here lately has to do with, let's actually pull up the chart on COVID symptoms. And what we're showing is how often and how much people are searching for specific symptoms. It can be everything from anosmia to loss of taste and smell to shortness of breath, fevers, and so on. And these were pretty good at telegraphing the actual eventual rises in case counts that Jim is talking about. Initially, we saw that surge, of course, coming into the pandemic in March. We saw another one in the Southeast in July of 2020, and then the biggest, or I guess not the biggest compared to March, but another big one that came into November of 2020. And now we're seeing just a very modest rise in this search activity. So it's either the case that everybody knows what these darn symptoms are, or the case is that this ultimately will prove to be milder. Like Jim said, this is kind of in the early stages, and I think that the burst in cases is something that's finally just hitting in the past couple of weeks in the U.S. in terms of the consumer psychology, policymakers, the news trends, and so on. And what this really gets to the heart of is, something that we're kind of all looking forward to. Not necessarily that we're optimistic on it. That's a great thing. Just that it's supposed to happen, which is the return to the office and return to workplaces. So as children go back to school, hopefully we get childcare needs figured out. We're supposed to see this grand revival of the workplace. And this chart here shows a search activity related to staying at home, all these topics that have to do with that, which is in orange, everything from, let's do some home improvement on our home. Heck, we're here, let's redo our kitchen, personal computers, binge watching TV shows, all the way to just good old fashioned telecommuting. And that in relation to the going out style searches, which is everything from like, I need someone to take care of my grandpa or my dog or my children, all the way to I need a dress shirt to get back in the office. The comparison here is kind of flipped around just in the past few weeks. So once the vaccines hit, the amount of search activity for kind of the stay at home, work from home topics plummeted and remained low up until just maybe 2 or 3 weeks ago, and now it's started to rise again. So as Jim said, we haven't had a high degree of deaths and hospitalizations, especially in highly vaccinated states, but cases are driving some apprehension from consumers and their willingness to get back to the office, and potentially maybe we'll see their willingness to be out and about. I will say that the mobility data from Google around retail and recreation sites remains high. It's somewhere between 10 to 20% above baseline, meaning pre-pandemic levels. So consumers are out and about, but in terms of being stuck in an office place or workplace right next to their fellow workers is something that they certainly are apprehensive about. And this will be kind of the big story. And I can talk about too the news trends here after I stop and give Jim and Kristen a moment.
Well, next I was going to turn, Jim, do you want to comment on this first?
Yeah, the only thing I would comment on, and that's kind of where we're going to go next, is summing all of this up and what this means. But Ben, I've got a question for you. How is this going to return? How is this going to affect the return to the office? And the day we're recording, Citibank announced that everybody that is in the office now has to wear a mask, even if they're vaccinated. These are the types of things that I'm sure managers don't want to have to tell people as they're trying to get them back into the office. Are you seeing any of this showing up in the search activity yet?
Yeah, absolutely. I think the charts we were just showing with the apprehension is certainly part of that. So you have You have tech companies like the Googles and Facebooks that are saying you don't have, if you're going to return, you have to be vaccinated. So there's a hurdle there. And then many now are coming out like cities saying you have to wear masks. I don't think many people want to sit in an office with their mask on for 8+ hours a day. We have some news trends confirming this. Here's a news trend chart showing the amount of news articles talking about requiring masks to now requiring vaccinations. And we're actually seeing the most fervent news trends on these topics since really, July of 2020. So this is front and center. So I think the unfortunate thing is we are likely going to see a very stalled, even slower return to the office instead of kind of this big regime shift we thought would happen after Labor Day. And I think that is, in terms of economic consequences, maybe there's not that much, but I think that it will create within organizations some angst and certainly some conflict, which will be interesting to watch.
I'll also remind everybody that while you're definitely seeing signs of apprehension to return to the office, your data is also showing that no one is slowing down in their ability to move around. The mobility data is not showing anything. A chart we didn't add in is the number of daily vaccinations is still down around 300,000 a day, which is low. And it's not, all this talk about increased Delta variant is not getting people to rush out and get vaccinations. But the Cubs are still selling out, the bars are still full. And I still think it's more of a case that people don't like the office. They just don't want to go back. And we're just giving them a nice, convenient excuse to say, well, the office is dangerous. I can't go back to the office. But we can talk more about it when I get back from the Cubs game and back from the bars about how unsafe the office is. And that gets to a bigger cultural thing that we've touched upon on these calls from time to time, that I think that the nature of the office has fundamentally changed. And for those managers that are trying to say, let's pretend it's 2019 and get everybody back in the office as quickly as we can, we ain't going back there. I'm not sure where we're going, but I know we ain't going back there.
And the proof
at this point.
And the proof is in some of those quit rates and some of the anecdotal evidence we've gotten for reasons for people moving. I mean, the millennial younger population is certainly got this in their head that this traditional 8 to 5 slogging it out in an office where your productivity is not the highest is certainly not, for most, is certainly not not good, both either for the worker or for the company's bottom line. But that's, like you said, it's a cultural thing, it's a generational thing, it's a problem. But looking at it from a market perspective, it is interesting, Jim, like you brought up, that these reopening stocks have picked up on this dynamic and potentially did this early. Beginning in early April, we started to see the slowdown in reopening relative to the stay-at-home stocks that have been doing so well. So yes, consumers are getting out and spending. We just had a great personal consumption number that came out. Search activity remains pretty strong for the most part in the space. Consumers are mobile, but the inability to maybe revitalize some of these metro areas where a lot of these workplaces reside is enough to cause this bifurcation between, again, stay at home versus the reopening stocks.
So Jim, any summary final thoughts today?
Yeah, I think, when you want to summarize, what does this mean for risk assets? We've laid out a case here that there might be some kind of economic restrictions coming, that there might be apprehension to go back to the office because we really don't want to go back to the office. And you'd be correct to say, that sounds like less economic activity, maybe lower earnings, that might be bad for risk markets like corporate credit and stocks, and it might be good for things like treasury securities as the economy slows. But bear in mind, on the other side of the equation, there is the potential of more stimulus coming too. Remember that in April, late March, the American Recovery Act sent out $1,200 checks. The all-time record inflows into mutual funds and ETFs was early April. So when they send out that stimulus money, it all goes into the stock market. And there's this hope, or maybe thought, if these case counts keep going up enough and the restrictions come back enough, the big offset will be more stimulus. Look no further than the day we're recording. Biden administration has come out and said that they want to extend the eviction moratorium for people that aren't paying their rent. It's due to expire on July 31st. This is after they said that July 31st would be the last time that they would extend it. Now they're extending it one more time. And so it gets the idea that the answer is the virus is going up, we got to mail more money. So what you're seeing in the markets, I think, is two things. The overall level of the risk markets like the S&P are hanging in there, making new highs, but the dynamics within the market are changing a lot. As Ben said, the reopening stocks are really struggling over the last month as the virus has gone up. The tech companies or the work from home companies are doing better. So you could see the market shifting, saying, hey, look, we got this Delta virus coming and it's going to mean something, but not sell off the whole market because, you know, a check's going to show up in the mail and then I'm going to put it in my Robinhood account and I'm going to go buy some meme stocks and maybe some spiders and continue to push the market higher. So bear in mind that when you think about what does this mean for the economy, there is that idea out there too that it can lead to more stimulus. Look no further than we promised that we weren't going to extend the eviction moratorium. Well, now we're announcing that we want to extend it one more time.
Mm-hmm.
Ben, any final thoughts from you today?
No, I think that's right. You know, I think I was surprised by the announcement today as we're recording about the eviction moratoriums. And like Jim said, they had indicated this is the very last time, but that didn't prove to be true. And we also have infrastructure spending coming most likely, and that's another form of stimulus of sorts. So it's hard to say it's like not a it's to say it's a can't lose situation for risk assets, but it's kind of been the case for really since the pandemic got going. So I think really we need to watch those mobility numbers. If consumers do fine, we're not returning to the office as fast as expected, but if consumers stay mobile, I think that things overall will do well. I still agree with Jim though. We got to watch kind of the pieces here, staying in versus going out, but keep a really close eye on the mobility numbers and again that search activity. As long as we're not seeing search activity both for symptoms rising back to levels we saw in July and November of last year, and as long as consumer search activity for major goods and services remain okay to good, meaning rising, things will still probably power forward. So we'll see. And now obviously treasury yields is a whole other topic. That's a whole other discussion here. We'll leave that for the next one.
Well, thank you both for your thoughts today, and thank you everyone for joining us. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our two most prominent offerings are Bianco Research and Arbor Data Science. For any questions or further information, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day.